Yeah, thank you everyone for joining in. This is exciting panel altogether, right? So we have been talking about technology due diligence just a few minutes back, right? Which is where I mentioned about one of the experiences what we had when we were working in one of the microfinance organization in Africa. Likewise, the tech which is built here and tech which is built there is very much different, right? So that differences could be seen not only in the business models, not only in the technologies, but in the investments altogether. So that's where I think we'll be having a lot of insights from this panel. I would be looking forward for. So thank you everybody for joining in. I would largely, what we see here in India and what is there in Africa. So we have India Stack, which is a very different thing, which is there in the India and where we are utilizing it all over. But in Africa, it is pretty different, right? So not like it has not been followed, but they have their own, what you can say, the strategies to implement this and the own ways of handling the things. So yeah, and from the fintech's perspective, that space is also growing because that is becoming some of the spaces where the focus is there more on that side. Not only the Africa, but in Asia also there are a lot of countries which are still developing. I'm sure, many of them have already been going through that journey and have experienced this. So we'd like to take some, knowledge and some insights from that during the session from you. So thank you again for the joining in. So I'll start with Anand. Largely, you can start with the introduction also, and would like to understand that what is a bridge that is being formed while building this altogether, India and Africa altogether, and in the financial inclusion also. So that's what we would start with.
Yeah, hi. Thank you. Thank you, first of all, to having us here. Like brief intro, I'm part of Nexus Venture Partner, look into financial services investments over there. We are a early stage investment fund partnering with startups from very, very early on in their journey. Have been very active in the financial services domain as well. Prior to that, I was operator slash founder myself. I think I've met Vikram in a very different avatar earlier on in my journey. And then after that, interestingly, since the topic is about Africa and Asia, I used to work with a micro insurance company. I was their India CEO. It was an Africa-based, its company started from Africa, then was very much present in all parts of Asia. I headed them in Asia, including parts like Philippines, Indonesia, Malaysia, Cambodia. So we had a lot of micro savings and micro insurance products over there. And the topic that you talk about is very, very relevant because specifically in this decade, because when we started the decade, probably India and all these countries were similar journey or a similar stage. Maybe Africa was a little more backward. Indonesia was probably a little ahead of this. But in this 10 years of financial inclusion journey, India has left most of these countries behind. When my last organization had started in Africa, M-Pesa was being talked about as a lot of a new innovation. But the way UPI came and completely changed the financial inclusion aspects, it's very interesting to notice now the regulator's concern is how retail investors is actually dealing with FNO, or how micro loans have penetrated more than what it should have happened than actually pure play financial inclusion, where 10 years ago the discussion was nobody's getting loan. People are still not getting into participating in share market. So it's actually swung a little bit on the other side in India, for the good only, I believe. But there are multiple things which helped in doing that. If you think about financial inclusion, three most important pillars are where there is a product innovation or not, where there is a distribution innovation or not, and most importantly, both of them can happen only if there is an infrastructure innovation. And what India outplayed everyone was, if you think about infrastructure, it's not just Aadhaar and UPI. Aadhaar and UPI is built because there are so many Jan Dhan accounts. And earlier it was talked that Jan Dhan accounts will not go anywhere. But look at what is happening with all the UPI autopay and everything. So all the accounts seems to have something. Then you had obviously the identity layer with Aadhaar, and then after that on top of you had the digital penetration with Geo. If all these were not together, UPI or the payment layer will not be happening. And in terms of financial inclusion, the products that we are talking about now can only happen at the scale and with the unit economics where when we are talking about financial inclusion, the segment it works in, it can only happen when this sort of infrastructure comes in. So when you say what the other geographies can sort of import from India, see, the products lending has been around forever. Savings in different forms. If you ask me, informal markets have worked in those with products which are way more customized or personalized for the segment that we are talking about. So probably the product innovation will go hand in hand, like more products will come in, and we can talk about that as well, which is facilitated by the infra. So new products which is feasible only with the new infra, and the distribution channels which are now cost efficient or effective to reach to this segment of the customer because of this. So if any of these other countries have to sort of learn or transpose from what has happened in India, the infra layer to start working in that segment will be the most important aspect they should probably take away.
Yeah, thank you. Thank you very much for that insights. So we have Anuradha also on panel. So Anu ma'am would like to ask from your perspective, like when we have, what are the investment strategies that should be looked at it in the emerging market, and what are the new things are been coming from that side? So any insights on that would be useful along with your introduction.
Sure. And before we start, thank you for having me here on the panel today. It's nice to be with all of you today. And just as by way of introduction, I'm Anuradha. I'm managing partner at TVS Capital. We are a mid-market private equity firm. In terms of what kind of investment strategies work for in emerging markets, I would say 2-3 things, right? India obviously has raced ahead. If you thought about 5 years ago, China versus India, right? And China was attracting quite a bit of capital as opposed to India was in India. But as we have seen gradual and sometimes steep adoption actually happening, Indian markets have caught up literally in terms of investments. In terms of returns, I'm not sure that the story is fully played out yet. But we are beginning to see with an active IPO market that part is also beginning to actually fall into place as such. With all this coming together, there is affordability amongst Indians. As he was saying, there is also adoption which is happening at scale, and scale that we have never seen before, right? In general, the numbers in India actually play out. What is still actually to be proven is monetization models and the value that different kinds of models actually see. Where is the value capture is consistently a question. And if you look at technology-driven models in the last few years, because of regulatory interventions, some of them have been impacted also, right? So the value capture part of it is still not extremely clear as far as India is concerned. Now, as you think about other markets, right, which is where the affordability is slightly higher, like he mentioned Indonesia, the affordability is slightly higher. In Africa, where there is actually a differential system which actually which kind of prevails. So the kind of investment strategies that you would use in there is very different from what you would use in India. So I'm not sure that there is a one size fits all, but if you think about, if you think about the markets in India as such, I think we are in a place of consolidation after a decade of innovation. In the place of consolidation, typically what you would see is the winners stand out, right? And the winners will determine actually how the forward progress.
Can you close that door, please? Sorry.
So the winners actually will stand out, and that determines actually how we move forward as such. So what we think of currently, it's an exciting phase. Actually, consolidation is just as exciting as the innovation phase. It's different kind of excitement, right? Where you see actually the ones the mature companies, which are capable of hitting capital markets, holding steady in valuations, building for institutions as opposed to being disruptors alone, right? Innovators becoming actually the institutions is the phase that we are in, which is equally exciting, and that's actually what we are seeing currently.
Thank you. So moving on to the Madhu, from your perspective, would like to understand. Likewise, the infrastructure-based plays a very big role in this, right? So be it bringing the new innovative business models or running the existing model in different customer segment and different formats altogether. So working in, building such a company which works all together in this particular era, where, as you always say, is API is something which is very core to it. So how do you see these things are coming in the way of all together into cross-border, like India and Africa, Africa and India, or Asia altogether?
Thanks, Vikrant. Thanks for having me in a panel where I'm the only founder, where investors are there who have a lot more ringside view of what's happening.
No, he got you here so that you give the answers. He was not confident any of the investors would have answers.
So I think the way I look at it is that so buying behavior is going through a big change. Right? As a consumer, all over the world, you have an emergence of mobile becoming the storefront where financial services will eventually get distributed, right? So therefore, you will, as a business, thrive if you're able to actually play at the intersection of financial services and consumer tech, right? So if that is the pegging, in a market like India, we've seen that explosion happen where new business models have been forced or thrust on us, because if you take payments, there's no money to be made in payments. So every payments company will have to innovate and figure out what's the second order effect on their business. Can I do lending? Can I do bookkeeping? Can I do more with my cohort of customers so that I can make money? Has become a survival necessity, right? Otherwise the business will fold. So therefore, those business model innovations that are happening in India, and you look at several other markets, they're a fraction of some of these countries from a population scale, right? Most Middle East markets is not even the size of Malad, right? So you can virtually service market sitting in here in India, and you probably need some regulatory structures and all that. Assuming that those things get taken care of, the ability for Indian companies to actually go out and operate in a lot of the markets that are what I call as sub 5 hour flying distance, right? Which is a threshold for a lot of large companies to give business class tickets, right? So you can actually be flying economy and serving a lot of markets, and which will actually cover 20% plus of the population globally, right? And what has changed the last 10 years is the fact that 10 years ago, if you are a Infosys or any of a tier 1 technology company from India, you had a lot of respect, but anybody below that, there's a lot of suspicion, because several companies have tried to get body shop work and do that in India. They've not done a good job of it and things like that. For us, the overarching macro in the way UPI and some of the other financial products have played out is actually now given a fillip for founders like us when we go out to these markets. There is recognition that we're coming on the back of deep work that has happened in the last decade or so, right? So therefore the tailwinds are coming from what execution is happening in India. And you're able to then actually take that work to that market. Africa is a very, very different animal. It's harder than India in terms of geographically how they are spread out. Each country has its own regulation. Several countries are more corrupt than we are more broadly at an economic level. So it's so much more harder to business in India. Like the East Africa and Franco-Africa are very different. They are French speaking, so you have language barriers because our teams are not trained to deal with French speaking folks, right? So you have to get down to basics in terms of what you want to do, which markets and all that, right? And you will find that a lot of that spaces that are out there, there is no ask for a bleeding edge tech there. So the choices, for example, we have operations in Egypt. The choices are between running in an Excel sheet, like if I take loan management software as a product, between taking it in from an Excel sheet to moving to our platform. The regulatory strictures there may not even have the ability to do it in a shared application, because banks or financial institutions have never been trained or coached to say, can you buy a shared application, right? They all have it in-house, run it. So there's a big aspect of enabling it regulatorily, which again, like the way today all of the success on UPI is being used by the government also as a diplomatic currency. How much you are able to ride on their coattails to say, can we do more of it? Government is trying to actually do that. Within MEA, there's a department called Nest that has got formed, where Indian companies more broadly, not just FinTech, is actually being taken and presented through the Indian mission and all that. So I think if you're just aware of some of these, I think like a lot of the Indian companies can actually benefit out of what we execute here and play it out in the market.
So, thank you. Thank you, Madhu. Vikram, would like to understand, like, there are things which are happening in India as well as outside the India also, right? There is a lot of innovation which is happening in the technology. Maybe in a short note, it would be like we started with wallets, then phone. Now you don't need to carry a phone also, right? You can carry just a ring which is there in the hand. You can use that for the payments. So in such innovation area, how this technology is also been seen from your perspective altogether?
So quick introduction, I'm Vikram. I've been investing in FinTech for a decade and a half with a firm called Z47. We were called Matrix India before. And at Z47, we have this theme of made in India for India and then made in India for the world, right? And this sort of sits very nicely in that second segment. And I want to go back to something that Madhu said. And I have a couple of hard questions for him. So I think the way I think about it, at least this theme is that there are 4 segments in which, you can see parallels both in India as well as globally. The first is just the identity stack, which is actually very proprietary to us. The second is the payment stack. Then the third is the API and middleware enabling stack. And then the fourth is the product stack, which is, you can build cards on top of it, you can build lending on top of it, and so on, right? The question is, which of these can we export? Now, I think the identity stack is the hardest to export, and that's where I want to come back to you on what, if you don't have the identity stack, how much of what we have built here is exportable or not? But I think the payment stack, again, is actually a very sovereign stack, very hard to export. But I would argue actually globally, everybody's come to this realization that debit-to-debit payments is very efficient, and everybody's built some model on debit-to-debit payments, right? Singapore has its own debit-to-debit payment. Indonesia has something. CBDC is actually taking off in pockets in Africa. So somebody is going to build this debit-to-debit payments network. So assume that is a solved problem. So then it is API middleware, and then right products for right markets that can be potentially exported. I think where you are, which is actually API middleware, seems like it is the most exportable. And therefore, you're seeing a lot of this innovation which is happening here, which is now being exportable. It's definitely going to the Middle East. I know you're in a bunch of African countries. I was just talking to Shashank of Razorpay before I was coming here. They are making a big push in Southeast Asia, where they are able to see very easy, simple parallels, both on sort of the payment stack as well as the middleware API stack. So I think there is a clear opportunity that because the world is evolving on debit-to-debit payments, and the only country where debit-to-debit payments has been solved at scale is India. Therefore, you have this exportable product set, both on the middleware API layer and potentially on the top layer on apps and so on. I don't know if that resonates with you. And I don't think the one question I have is, so much of the API middleware layer is so linked to the identity stack that how much of it can you really export?
Yeah, I mean, this Arvind Srinivas, founder of Perplexity, sort right? Everything is a wrapper on something else. So a lot of the middleware playbooks is efficient, and the weakest link is underlying systems, how efficient they can actually get, right? So therefore, we are seeing a transition in terms of consolidation of tech also. If I just take lending as an example, if you have a very efficient onboarding journey, the need for an LOS actually goes out, right? The reason why you have LOS as a standalone system is that financial institutions have not figured out how do I get a customer and actually mine that data to do more with that customer efficiently. So therefore, every product will have its own avatar of an LOS, which then goes and propagates and all of that, right? So therefore, at one end, we are seeing that consolidation being thrust upon because there is regulatory mandates around it, or you just want to make the systems more efficient. To your question on what happens if I take Aadhaar out of the equation or the identity stack out of the equation, I think that is truly our invisible hand that is making a lot of things tick, right? In market, UPI is somewhat solved for. To your point, everybody has figured out that you need to build defenses against the American companies. There are some local networks that are there. UAE has got something going. I think over time you will have 5-6 large retail payment networks. UPI has like stake to claim for a bunch of markets in global south, And then you will see that kind of consolidating with, every banks will start putting out their own CBDC equivalent. So the RTP networks will ineffectively become the channel for even stable coins to also get sort of transacted and so on and so forth. That's where directionally it's going. So payments, I feel that in the next decade we will have RTP networks all over the world take on completely. You might have one unified version for, let's say, Middle East and one for Africa. Like M-Pesa was that pseudo sort of RTP platform for Africa. But on all other business applications where the identity stack is not there, we have found it really hard. And you will actually find that consumer tech action in those markets also is like not as vibrant as what we see in India, right? Wherever RTP or there is that government nudge to actually make it simpler from a digital transformation standpoint, that much more harder for consumer tech companies also to kind of prevail and
because the identity stack, I know you wanted to come in, but the identity stack is fundamental to I know who you are, then I know how much you make, is fundamental to sort of then designing financial services products to you.
There were different ways, and I'll come back to this because you have seen me in that avatar, Vikram, right? That in which some sort of identity stack was there, like the KYC VAS ecosystem. Because which, if you remember at the time of Bima, was that you could still deduct the VAS thing. That didn't work out because it was not really in a configurable format. It was just sitting in silos where the telcos were. What India has done is, if you think about it, it's the three things coming together. It's just not the identity stack. If identity stack was in silo, but the digital penetration was not at the level at which it is not configurable. The digital penetration went up with the entire internet penetration going with Geo, with the processing power coming in the hand of people. The number of smartphones that you have. UPI is also available in the VAS format and with the smart, hash 123. Nobody uses that, right? Similarly, if there was no bank account, when we are talking about financial inclusion in that per way, that will not happen. Just the payment layer can still, in Brazil it exists. Pix is almost scaling up in the same level as UPI, right? But the combination of the things which are happening in India, and then when, let's say Madhu is talking about the API stack on, can now credit cards come in? Now the credit card, can it happen on UPI? That solves for the, penetration, the acceptation problem which we used to have. So, when I look into India, the unique thing, and that's where when the first point I was taking about, that a lot of the things that we are trying to export on the API layer is not just dependent on one infrastructure. The magic that has happened in India is the combination of 3-4 things that's happened at the same time. And it's very unique. Now, what part of that gets exported without that infrastructure existing? Why even the developing economies, many of the developed economies will also not be able to match. Like the same stack will not go over there.
Madhu, are you selling in the US?
We are. I mean, US is a third world country for payments.
I was just going to say. So,
look at Venmo. It's so subpar.
I was asking Shashank and Redhape how, because I know the two of you guys are trying to do this sell to the US, and of course there's a lot more dollars at stake. But it seems like from an intent perspective, also from a capability perspective, it's harder to sell there than in the global south.
Yeah, I think there is a cold start problem in that market. So if you've figured out GTM and have that sales machinery start to work, I think the economies of scale at which we operate, if you're able to marginally make better money, any market becomes very, very enticing.
Actually, can I flip that question? Shouldn't it easier to sell many products in US and developed market because the things which have gotten created, like for example, Plaid exists in US. Account aggregator is solved for by almost the regulator itself. So shouldn't it be an opportunity where what you are seeing here, can it be replicated as an open
So two parts, right? But slightly nuanced in the sense that in the way regulations are in India, so it's rule based. So everything all the way to the last drop, regulator kind of prescribes how you should run a business, right? When you move to a market where it is principle based, and especially in US where a banker can turn around and say it's your responsibility to make sure that we are compliant. So the maturity that is required for an organization to be ready to take on that liability, because that market, somebody can take you to court to virtually bring the company down. So therefore, there is a lot of organization prep that has to go in for you to be ready to sell to that market, where today you are handed out saying, this is what I want. I'm not giving you a choice. You could be calling yourself a product company, but guess what? Unless you tick all the boxes in my checklist, I will not take the product live, right? So it's a very big, so you could virtually go, which is why, if you read the undercurrents in US on BaaS specifically, the reason why you have a lot of these companies today in graveyard is because there was no regulation that said how escrow balances should be kept, right? But in India it's very, very prescriptive. How you can make money out of the escrow is also prescribed, right? So there's a very, very big, it's a massive gap between how we operate in India as tech providers, not a regulated businesses, to how, if you're aspiring to be in some of the developed markets, and then we have to also be prepared around privacy and a whole host of other things which we are somewhat taken for granted, because it's not me, but it's the bank who actually have to take care of some of that.
I think structurally it's also that the overall, I think there are market forces which are resistant to adoption of some of the new tech, because the new tech automatically shrinks the profit pool. And these profit pools have existed for 20, 30 years. Here they didn't exist at all, right? And before they could exist as a overall ecosystem, you didn't get used to it. Now, because people are so used to doing this, I think it's very hard to switch over, right? So that's one. I think the second is, if you take what Madhu said, Plaid is a company that is very large. We all really respect them. But if you take the founder of Plaid, one of the founders of Plaid, William Hockey, and Will actually essentially took this and said, hey, you know what, as an external BaaS provider, I can't actually change this as much, so I'm going to go build an API bank. And he went and took over a bank which is Column and said, you know what, I'm going to build an API first bank, because that's the only way from a regulatory framework perspective, he can actually build that. Sorry, Anuradha, yours.
I was just going to ask, therefore, as you think about it, on the one hand, all the monetization or the value opportunities exist out of India. On the other hand, they are very tough markets to crack into, and there's a big risk also. So as a founder, how do you think about it?
So I think you see what we have seen at least is that it's an 18 to 24 month journey before any market actually matures into an opportunity bucket or not. So that's an investment that you're making into a market to say, are you able to get traction? Are you able to extract value? Are you able to find relevance for your product offering and all that? So till then, that's a hobby activity. It cannot take more than 5-10%. US is like very exciting, but guess what? We can't move there and operate from there. So it takes time. It's a slow burn. It takes like 2-3 years for you to really kind of get to a point where you know that this opportunity is real. A lot of promise in Southeast Asia for us, but when we actually got down to executing, each of those markets had its own kind of nuances, either culturally, regulatorily, or whatever. So we had very similar, when you look at it from a 30,000 feet, Indonesia, Philippines, all of them feel almost similar from a demographic profile standpoint to India, but very, very different characteristic when you get down to execution, right? So after 2 years, we said Indonesia maybe is not the market that we would want to spend more time and resources on, so we kind of pulled back. But Philippines and Vietnam continue to kind of chug along. So therefore, it takes 2 years for you to get to that point of decision after you have, you know fully well that these are the things that you would want to do. So yeah, that lead time is gestation period where it's almost like figuring out whether you want to be present in that market. And we have 30 markets, 6-7 markets we've actually walked away saying that it's not efficient for us to run.
If you look at developed markets, the kind of dollars which are available are very attractive. So a 2-year journey, you might want to put in the effort. And sometimes in the other emerging markets, it's not very clear in that context, right? So how do you think about it? Are you thinking about it from a perspective of, therefore, we would be the charge leaders if we crack this? What makes you stick for those 2 years in smaller markets?
So, emerging markets, you have very similar procurement characteristics like India. So it's either RFP driven or there's value conversation that happens. Vis-a-vis US, it's more about, we don't have negotiation conversation the way we do it in India, right? Unfortunately in India, all the way from the procurement guy to the CEO, everybody negotiates. There's no commit to contract. You sign a TCO, एक साल के बाद if the program scales, you are then pulled in to say, let's renegotiate the contract because we are paying you too much. There is the other side of it where, so therefore, there are foundational challenges around how you can commercially run a large-scale business in India, and it's just the characteristics of the market, right? Which is not the case when you look at it in the US, because people don't, pass judgment on what the platform and what it can do, because they're going through that buying process, knowing fully well what are they getting for it. And normally in the product tech, or when you speak to people, you will not have scope creep. The gestation time in India, for example, for a program, any bank implementation used to be 6-8 months, 3-4 years ago. Now it is actually stretched to 2 years, right? In that 2 years, so much of regulatory changes happen, so much of business model reorientation happens. So by the time you get to that point where the product is ready, you have a whole bunch of changes that you have to do. And now you're so invested for 2 years in that program, are you going to make this change and make the product live, or you're actually going to kill that, right? So that those elements are not there. So therefore, it's a lot more cleaner to do business, but so much more. That's why it's important to get that engine room humming. If you find an efficient way to actually solve for the cold start problem in that market, it's actually a very large opportunity.
The only thing I would say is, when we have a lot of companies who are building software for the US specifically, I think the US specifically needs a very different thinking because of what you just said, right? And I would argue you have to actually, the strategy that you said, which is to, sort of dip your toes in, test the water, and then commit in like 18-24 months, might work for some of the emerging markets. But for the US, I think you have to commit first.
Absolutely, yeah.
And I think if you don't commit some of the marketing sales dollars first, because I know you're saying that we have credibility as a India FinTech ecosystem, and therefore, some of that carries over. I think the US is very hard to build trust and credibility.
In the perspective that, like in the US, for example, our first hire was the CTO for the US market, right? You have to actually have a white American running the show. We're like 20-member team in technology with $0 in revenue, right?
Yeah.
That's the test I'm saying, right?
Yeah.
2 years out, we may have some customers who will actually buy it, or we may decide that this is not the market that we are mature enough to sort of serve. But without that commitment, without actually putting that team, it's very hard to, exactly agree to your point.
And I think, at least for some of our enterprise-first companies, one of the things that we are seeing is that founder brand, and almost the CIO being surrounded by the founder brand on LinkedIn and different forums that they're on, whatever is the right forum for bank CIOs. I think that really helps, right? You have to actually take up the credibility of that founder brand, and then you're able to do that first set of founder sales.
So Vikram, a lot of the Middle East markets also are very, very high touch, right? So when we started executing 3-4 years ago, we at least created that impression that we are virtually operating out of Dubai. So a lot of people would come to ask me, like in events like this, say, how are you?
I asked you that.
So you've got to create, we would have cards, we would have local numbers. So, a lot of that is required for you to actually, they want to make, a lot of these, procurement processes, the way it runs is that the CEO should feel that you are there, right? So, and US is no different even from that perspective. It's not as much as what you see in this part of the world, but it's definitely is a factor. Sorry, we have hijacked your...
No, that's fine. I'm just listening through it, because one thing I just struck to my mind, like when we talk about the product, maybe building the product for India, selling it outside the India, or in vice versa also, there is one component which is very core to it and which takes lots of pain to everyone in that particular transaction, is the customization. So how do you think, maybe Anand, Madhu, you can contribute into this discussion, like this customizations specific to the, in the stack, or be it in the technology side, or be it from the business side, in the stack which is built for India, but now selling outside the India, because not everything works everywhere. So would like to know from your views on it.
Yeah, I think Madhu, obviously, we have made it almost investors quizzing a founder over here, but I'll take a stab at it because, so it's because we are using a very broad stroke by saying that what are we trying to export? Is it a consumer product? Then obviously it will be very, very different form factors, format, trust layers on financial systems are different in different geographies. It works very differently. M-Pesa existed in Africa because people did not have any trust on the currencies in Africa. And they had more trust in the currency as a telco currency versus if you see a Grab wallet is way more popular, probably whether they need a UPI with a Gojek wallet over there in the Southeast Asia, nobody knows, right? So consumer layer, the customization based on what is existing, what are the customer behavior. Like I was selling insurance and I thought we are talking about Southeast Asia in a broad stroke. Every country is so different. Like in Indonesia, Takaful, my head was like getting Takaful was a problem. Like we had to set up our entity in a different island outside of Indonesia. So it's very, very different as a consumer stack. Now when you go into the stacks which enable that, that goes into the banking maturity over there. We are talking about banking, there can be a very different. So talk about the FNO and the products we are talking about. Till 10 years back, everything was not dematerialized. The level of dematerialization that has happened in India is not available everywhere. So it's very chalk and cheese what you're using. There are commonality in multiple stacks. Like if you talk about the LOS, or if you talk about the central banking, CB systems, you talk about the card systems. On there, obviously there are things which you can probably take, learning from here, build it. Fraud, AML is a very interesting area because the scale at which we will be working, the sort of fraud at the real-time payment that learnings we have, that will go into different places. So it's a very subjective question on what can actually export, what can even work into some other geography, in which geography, so that matrix over there, and in that, what can even be customized and what level of customization that is needed. So it's a very, very subjective question.
Madhu, before you answer this customization question, we were walking over and you were talking how implementation cycles have just gotten longer and longer. With sort of AI customization at the app layer and the AI-enabled services, are you seeing anything getting shortened or it won't?
Not as yet, Vikram. Unfortunately, the bankers don't wake up saying, how is AI going to change my bank? So it's a very hard sell because the procurement is done as point solutions. So I want to solve for gold loan as a business case because the business head is saying, I want to scale this next year. Then the bank, whoever is making that purchase decision is actually going out scouting for gold loan, platforms, right? And to the exportability point, I think it's there are some products, systems of record more broadly, right? Wherever ledgering happens, core banking, LMS, credit card systems and all. The products are globally the same. Your bank account is not too different, whether it's US, India, like by credit card. So almost about 80% is cookie cutter. So you can take something from here, drop it somewhere else. We have American companies selling to all our large banks in India. So therefore, there is that whole aspect where credit card today is inherently run, which is why...
You think that dollar cost will always remain, or there is a way of replacing that dollar cost with rupee cost?
So it will actually benefit, and which is what I'm coming to, right? But if you fundamentally look at how one card has innovated on the credit card product vis-a-vis what banks have done, even if a bank so desires saying, I will pay whatever it takes, get my product to the standards of one card, India is a 1% revenue market for somebody from the US, but it's a 20% product noise. Okay, so by that what I mean is that there's so much change that's happening in India, very hard for an American company to catch up with what's happening in the broader scheme of what they are looking at from globally serving and all of that, right? So therefore there is never going to be a situation where somebody from the US comes in India and says that we will give a fight to an Indian founder and how Indian tech is being run, right? So that I think that will work to our advantage, which in a way will answer your question in terms of our ability to innovate at a cost that structures that we have in India actually will become the significant opportunity for us to serve other markets.
True.
Yeah.
True, very true. So that is from the...
Sorry. If I have to summarize, it's like spend in rupees and earn in dollars, right? So that's the theme.
Versus the VC model, which is invest in dollars, get in rupees.
But why haven't there been companies like that in India? Like what has been the biggest blocker apart from, let's say, the distribution? Like we do not have yet examples of that happening from India, right? From like building in India, we have been building the stack for 5 years.
Big challenge, right? When we looked around, you don't have Indian banking tech companies that have crossed even $100 million revenue mark. Okay, because you are so actually. It's a fight for survival.
Let me just debate on that.
Yeah.
That's been true for SaaS also. In India, we have not crossed 100 million revenue, right? But we have been able to get some revenue from the, let's say, other geographies. So what is it that works differently in, let's say, the infra or the software stacks for financial services and you're right, maybe the answer is, I'm just debating for the debating sake to get the answer from you. That it is, or is it just a journey that we are left to travel, that you see that in future we'll start getting more revenues from the US and the more emerging market?
Something that I mentioned earlier, right? I think there is a lot more acceptance to Indian tech at a very early stage. You don't have to mature into a very large company for you to bid for an opportunity in the US, which was not the case 10 years ago. Because there is that overarching.
So you see that happening?
Yeah, that is definitely.
I think the other thing is also, overall, when we are seeing overall enterprise software, it's also what is the purchase cycle for that, right? And so because these are very large companies with crazy switching costs, they just think in purchase cycles of like 10 years. But today there are so many trends hitting it, right? Which is real-time payments, AI. There's you have to keep pace with crypto and CBDC, right? That there is just the purchase decision cycles have suddenly become shorter, and suddenly they have to make critical decisions. And when you're making those decisions in a large company, right, there are smart people who are saying, I want a large consideration set. In that large consideration set, you go with this credibility, suddenly you have an insertion into the stack. That wasn't available before.
No, that's what we'll love to see, right? Maybe the next 5 years is about that, and we get to see some of the Indian companies succeeding in the development. Yeah.
No, that's pretty great. So, Anu ma'am, I just wanted to ask you from the perspective of a different vision altogether, right? We talked about the stack, we talked about the business models from that perspective. But basically, when you go outside the country or in any new territory, the culture plays a very vital role out there. Because if there are no cultural nuances which have been understood, you may end up there, but will not be able to much, from that perspective, you will not be able to much sustain out there. So are there any key considerations you would like to call out while working with so many fintechs? What have been worked out for them from the culture's perspective? So it might be like keeping your own office there or being there with the people or anything of that sort you would like to call out.
So there are two parts to this question. As an investor, if you ask, it's always local, right? That's one. What works for the local markets is something that you need to figure out, right? And you need to spend considerable amount of time in the local markets as well. So therefore, sometimes it's a question of scale. There are investors sitting in India and investing in Southeast Asia, in Africa. Right. But you need to spend considerable amount of time actually to understand many of the things that you're saying and understand what's happening on the ground. Because that's actually like the number of investments that actually make it big is also very, very few, isn't it? So in that context, you need to get a sense of what happens on the ground for you to know whether, how are you constructing your economics as such. So that's one part of it, right? And therefore you need to tune into that. The second is as an operating entity, it is a very different challenge. I think he's lined it out completely clearly, right? Which is each journey differs, right? There is regulations differ. There are people and hiring actually which differ. You have to have implementation partners. You need to spend long cycle times in terms of the buying cycles and so on. So that's a very different kind of a context. Do you need to be located in a market? Maybe not, but you need to again spend a lot of time in that market, and then once you understand, that's the 2-year investment cycle that he's talking about. So sometimes, to me, there is also a question, because we kind of tend to deploy slightly larger checks. For us, the question is how do you make that transition? When you're discovering market, on the one hand, you're defending a market, which is your home market, which is already very tough. Here also, implementation cycles are getting longer, and things change as you go, right? You're defending a turf, which is very tough. And then you're also looking at investing in newer and newer markets, where you have to test out to see which are the ones which will work for you. And you have to grab a large pie of it for it to become super profitable for you. So it's a pretty big struggle, I would say.
Sure. Thank you. Maybe if you have any questions from the audience, I would like to pick it up if there are any questions. Yes, yeah.
Hi, this is Param. happen to work in one of the emerging markets. So the question is actually based on what Vikram said. You have clearly the identity stack, the payment stack may not necessarily be as fungible. So is the answer in terms of picking up a small segment, SME or let's say under-penetrated retail and going after that versus investing big time, over a 2 or a 3 year window? So just a question open, or is it a question of like in golf, you drive for show, but you putt for the dough. So, stick on India and keep the India focus going.
See, I'll give you the VC answer, and then you can get the founder answer. But the VC answer is always, try to get to a pain point, which is a wedge in the door, right? Because, it's so hard if you go with a very, broad set of offerings, then you don't know what is landing. And so it is better that you have a very thin wedge or knife where you're going to go and poke very hard. And then if you see that slicing through, then the entire market opens. So I would pick something sharp. Right? Now, that could be that I'm saying that we have the best solution for SMEs. It could be that we have the best API solution for just doing video KYC. It could be that you have the best solution for underwriting for credit lines, and which you can take from here. So I would take one of these very sharp wedges and then go in. That I would say is a more VC answer, but usually founders can imagine a lot more than VCs can.
Yeah, just to build on what Vikram said, I think fundamentally the company is serving a purpose. Just to completely alluding to what he said, is that purpose and the denominators the same, right? So if you take out the commonality between what you're serving in a particular market, first you have to baseline to saying, is it the same variables that are out there, or if there are some elements that are not there. For example, identity is not there. How do you actually solve for it? To my earlier point around the gestation time that it takes is really that test and learn phase where you'll iterate fast and really get to a point of decision where you have facts to say whether the idea that you went in with is really actually executable in that market or not, right? For which you need an anchor customer, for which you need to figure out, what is the economically viable model for you to operate. All of this takes time, and you will realize at the end of that, 1.5 to 2 year journey that maybe the broad assumptions that we took with which we came in to this market, they don't hold good because of ABC reasons, right? From the outside, it feels like it's, we should actually be able to execute, lift and shift. 9 out of 10 times it doesn't work that way, right?
Okay, yeah, thank you. Due to time constraint, we may not able to pick up few questions. I'm sorry for that, but thank you everybody. Thank you for joining in and giving such an insights. So we look forward to you hearing again. Yeah, thank you.
Thanks for having us.
Well, thank you so much everyone for sharing your invaluable insights. We would love to appreciate and acknowledge your presence here by presenting you a memento. So requesting Vikrant sir to kindly present it to each one of them here. Thank you once again. Let's have a round of applause for all our panelists here. It was a very, very interesting and an insightful session which we've had here. Thank you so much, everyone, once again. Thank you.